Joining us on the line now is Jeff Reeves from Market Watch. And Jeff, thank you for the time today.
Yeah, glad to be here.
Jeff, so the title of the article is Buy These 5 Undervalued Stocks on This Market Pullback. Let's start first. The market has rallied a little bit the last couple days. Do some of these still look attractive to you?
Yeah, I mean, ironically, the pullback doesn't seem like much of a pullback anymore. The indexes are kind of in the green year to date. They're kind of looking, pretty robust after a strong week. So I don't know if that pullback, if we'll see it again, but, I think kind of the message behind these stocks still stands. If we do see, a little softness in the coming weeks, I think investors got to strike while the iron's hot. So I think all of these are still pretty good value investments as opposed to, some of the growth plays that we've seen over the past year or so that have gotten most of the attention.
Start with Macy's. They're down about 60% in the last few years. The charts don't look particularly pretty, but is there some value in this company still?
Yeah, I think there is. Macy's actually outperformed the market thus far in 2018. It's up almost 5%. The pain that this company has seen is obvious. In the age of e-commerce, brick and mortar hasn't been so great. But it actually had a pretty good showing this holiday season. It reports earnings for the entire fourth quarter on the 27th. So, you got about a little less than 2 weeks. I think kind of encouraging results there could lift the stock. It's also important to remember that, there's a lot of talk about tax reform out there. People kind of overlook some of these domestic retailers. Macy's books over 90% of its revenue in the domestic U.S., so a drop to a 21% tax rate as opposed to its previous effective tax rate of 36 is going to be pretty good for the stock this year. Add in a kind of single-digit PE ratio, and I think it's a pretty good value buy for folks who are looking for, like I said, an alternative to the growth plays that are out there.
And Jeff, are you thinking long-term buy and hold on Macy's, or just get in and make some profits while this good news comes and then get back out?
Well, I'm always reluctant with a kind of a brick and mortar retailer to think in years instead of just months. So I'd be comfortable just doing a short-term play. The dividend is reasonably attractive if you're a long-term investor, but there's always a problem of cuts or problems with the bottom line that make that go away. So if I could be more confident in the dividend, I would be more confident in the long-term play. But I definitely think this is one you got to watch. I think it might be pretty good for maybe the rest of 2018, but like I said, you want to think several months instead of several years about a stock like Macy's. It's been beaten down for good reason.
Jeff, let's talk a little bit about General Motors. This was a company that from its re-release into the wild in 2013 through the middle of last year was pretty much flat before picking up a nice rally at the end of last year. What do you think this one has kind of going forward over the next couple of years?
Yeah, I think a lot of the negativity around some of the automakers is a little bit overblown. We did see kind of record sales in both 16 and 17, and there's a lot of people who think that, to use an Apple-esque term, the upgrade cycle on autos is kind of behind us. But a big reason that we saw those sales is because technology in cars is just light years ahead of what it was even 10, 15 years ago. So, there is another phase to that, and autonomous vehicles and electric cars continue to come out, and they're getting big mainstream adoption. GM actually has a pretty good electric vehicle suite going on. They've redesigned all of their Buick cars. Actually, a big reason that they beat earnings recently is because the kind of redesigned crossovers and SUVs, including the Buick Enclave, apparently connected really well with consumers. So, I'm encouraged by all that. Again, I'm looking at value plays here. It also has a single-digit PE. The dividend at GE also I'm much more comfortable with. It's north of 3%. I believe it's about 3.5, 3.6 right now. So that is a stock that I think people can stick with long term, especially because we've heard talk from the Fed about how rates are getting higher, but the bond markets and a lot of interest-bearing assets are still comfortably under 3. So if you get 3.5 with a value investment like GM, I think that is a stock that you can hold on for a couple years and be pretty happy with.
Jeff, obviously you mentioned some of the changes happening in the automotive sector, electric vehicles, the shift towards driverless vehicles coming, at some point in the next, couple of years for a lot of these companies, GM included. How does a business model like theirs look with that latter shift happening? Do we have any idea what a company like GM could look like then?
Well, the biggest challenge with autonomous cars, of course, is that it's all about regulations and how it's going to work. You need to worry about insurance liability. We need to talk about whether cars are going to communicate with each other or with the road. I think that there's a lot of technology that needs to be ironed out. But I think the important thing to remember about a company like GM, it does have the scale. It does have the kind of will to succeed. There's a lot of talk about Tesla, but Tesla has problems just meeting demand now.
Right.
I don't know how it would ever survive in a land of mass-produced autonomous cars, even if that exists in 2020. That seems really right around the corner for a company like Tesla. So what you got to understand about a company like GM is that it is global. It does continue to invest in R&D. Its Chevy Volt line actually is one of the best-selling electric vehicles. People don't hear a lot about that because it just doesn't do the same volume. So I wouldn't count a company like this out. I think there is definitely going to be some shakeups on the regulatory front or the technology front, but where there's a will, there's a way, and I think GM at least is headed in the right direction. I would never hold any stock. It's the way I am. I never look at anything and say I'm not going to look at this for another 10 or 20 years. But I do think that 2018 and into 2019, GM is looking in really good shape, particularly considering, like I said, that the value play here is it's trading at a big discount compared to some of its peers, and I think that you can act on that.
Let's talk a little bit about Viacom. This is a company that we were chatting on earlier in the show. The stock has struggled over the last couple of years as well. It's obviously in a very rapidly changing media environment. What do you think they can do to position themselves going forward to potentially get this stock price to rebound?
Yeah, I mean, this is definitely one of those stocks like Macy's where I think that you got to be, it's a little touch and go, so you got to pay attention to it. But, Viacom has had obvious difficulties. It just doesn't have the scale or the brands that Walt Disney does. Sure, it has Comedy Central and Nickelodeon, but, beyond that, it's just, a bunch of different iterations of that ecosystem. So I think it's really important for Viacom to have success with its streaming launch. They're really going all in with it this year. The CFO actually said that they're putting all their assets against it, which is good news because, the time is definitely now to make that happen. I think the million-dollar question is, as a mid-sized entertainment company, what does the future hold? We've seen a lot of consolidation. We've seen a lot of folks, going big on streaming, but does Viacom have the deep pockets and the content library to actually survive? Those are open questions long term, but I do think, after a big drop off over the last, 4 or 5 years here, I think there might be some value to be had. Again, like I said, with the other stocks, this is a single-digit PE company that investors have kind of overlooked. There are hopes of a merger with CBS around the corner. You could see kind of a buyout premium priced in there. So, as I said before, I think it is touch and go. You got to watch it. But for folks who are just concerned with overall market valuation and chasing some of these growth stocks, with a forward price earnings ratio of 30 or 40, I know the lesson with Amazon is buy high and then just sell higher, but sometimes that doesn't always work. So if you're a more conservative investor looking for value plays, I do think Viacom and some of these other picks have some value right now.
Very good. Jeff, thanks for the time. Have a great weekend, and we'll catch up soon.
Yeah, take it easy.